Aristotelis from TechSapp will be sharing, that will be answering at the end of the webinar. Again, for those who didn't hear, please use the Q&A section and not the chat, and our speakers will be sharing the answers at the end of the webinar. Finally, please keep your microphones mute, just to make sure the experience is best for everyone. So without any further ado, I am going to pass the microphone to Marios, who is the CEO of TechSapp, and we'll get started. Marios, floor is yours.
Hi, hello everyone. Welcome to today's seminar with TechIsland, which we thank for the opportunity. It will be myself and Aris who will be taking you through today's slides. We promise to keep the language simple, to keep things simple in general. We know taxes are a bit stressful. So without any further ado, as Artemis said, I'm going to jump in the slides. This is the agenda for today. We're going to be taking you through the essential tax documents you need to know, the Cyprus tax law basics, obviously the hot topic, which is the 20 and 50% tax exemptions. I'm going to tell you in brief about the 90 days rule, which we find quite useful and not many people know it. We're going to be elaborating about the tax deductions, which allow you to pay less tax. And also we're going to be, at the end, taking you through how TechSapp works. And on point 6, we're going to be discussing another really hot subject lately, which has to do with the upcoming tax reform, which is not yet implemented, but there's many tax changes coming up, which I'm sure you will find interesting to know. I will be presenting as Marios, the founder of TechSapp, and Aris as the CEO. We'll also be taking you through points 3, 5, and 6, and 7 of the agenda. So moving on to our first slide. All right. So what are the major tax documents you need to know about? Point number 1, obviously, is it's the TIC. You need to get the TIC. It became obligatory, basically, as we speak, via the employer's tax form. Every employee needs to get a TIC, basically, from now on. As of next year, we expect that everyone would have to submit a tax form regardless of the amount of gross income. I'm going to elaborate later on that, but you start with getting a TIC and taxes net access. I'm sure most of you already have. Then what we suggest is to check your monthly pay slips every month. It's much easier to solve tax problems when it comes to pay as you earn as the tax year progresses, instead of waiting when you do the tax form, which is after the year end. So we suggest going through your monthly pay slips every month. Then you need to be aware of what the Form 59 means, the Declaration of Allowances form. This form is given to you at the beginning of each year by your employer, and you fill that form in, basically, regarding information that your employer cannot possibly know about. Your employer uses that form to properly withhold your taxes. So on this specific form, which again, you are granted by your employer at the beginning of each year, or when you switch employment, on that form, you need to claim whether you have any life insurance, health insurance, and most importantly, whether you claim the 20 or 50% tax exemption. This form is SOS, and not so many people know about it. And that's where problems begin. If you don't state on this form that you claim your 20 or 50% exemption, for example, then most probably your employer will not be claiming it throughout the year. So it's a very important form, and you should be aware of it, Another form you should know, it's a Form 63, the Certificate of Emoluments form. This form is given to you after the year ends. So for 2024 calendar year, which is the same as tax year, your employer will give it to you maybe around January, February next year. It's again a very important form, because you will need this form to fill in your tax form. It's a summary of your emoluments and your tax deductions within the year. So you need this form. This form is crucial for you to fill in the tax form and your employer is obliged to give it to you. You'll be surprised how many people confuse this form with the actual tax form. Completely different. And finally, it's the form the TD1, which is your actual tax form that needs to be submitted after the year end. And by the 31st of July, this is a statutory deadline. The actual deadline usually gets postponed for the 24th tax form. The deadline is end of September 25. So these, when it comes to the tax papers, the essential tax papers you need to be aware of. Now, we're going to move on to the Cyprus tax basics. Before we get there, we get a lot of questions on a daily basis. And here are some of them. When do you have to submit a tax form? Or do I have to submit a tax form? And the answer here is you have to submit a tax form if your gross meaning before tax, income over the year is above 19,500 euro as a salary, yes, the most common example. So if you get more than 19,500 gross, then you have to submit a tax form, as the law stands. Again, as of next year, we expect that everyone, regardless of the amount of income earned, will have to submit a tax form. And it's going to be via a different system, most probably, called Tax for All. Right now, you submit through TechIsland, and this is regarding point 2. There's 3 different tax portals. I know it's a bit confusing, but it is what it is. At the end, soon we expect that it's going to be just one. But as we speak, there's TechIsland, Tax for All, and Tax Portal. TechIsland is the system you use to submit your tax form as we speak. Probably next year you will be using Tax for All, and Tax Portal is the system that you use to make any tax payments. So another question we get a lot has to do with the tax exemptions. Can I claim the tax exemption of the 20% or the 50%? There's no easy answer. Like 99% of the times, there's no easy answer. Unfortunately, we strongly advise you to seek personal tax advice on this subject because it's complex. It's changed a lot. There's 2 main tax circulars on the matter. And if you get it wrong, the tax bill will be high. So this is, again, an SOS point. And obviously, we get the question a lot on how can I pay less tax, legitimately, of course. There's so many ways, which we'll be elaborating down in the next slides. So let's talk about the basics. Why do you pay tax in Cyprus? You pay tax in Cyprus if you spend more than 183 days in the island, if you're physically present here. If you do that, according to the local law, you become a Cyprus tax resident automatically, let's say, and you're liable to pay taxes in Cyprus on your worldwide income. Meaning that if you spend like 9 months in Cyprus during 24, and you have salary income from an employer in Cyprus, and you also get, I don't know, dividend income from shares in Apple, or you get interest income from your Revolut, whatever, you are liable to pay tax on that income in Cyprus because you're a Cyprus tax resident. As simple as that. If you don't spend more than 183 days, you're a non-Cyprus tax resident, and you only have to pay tax on your Cyprus-sourced income, which in brief, it's income from a Cypriot employment. Yeah, your Cyprus employer paying you salary. It's rental income from the Cyprus property. You own a flat in Limassol, you rent it out, and you get money from, you get rental income, basically. It's taxable in Cyprus, regardless of being a tax resident or not. And Cyprus pensions, indicatively, yeah? The usual scenarios. So, to wrap up, which again is a very important slide, you spend more than half a year in the island, you are a Cyprus tax resident, you pay tax in Cyprus on your global income. You can become a Cyprus tax resident via the 60 days rule. I don't want to go into the details, but in brief, if you spend more than 2 months and you also meet a number of other criteria, you can claim the Cyprus tax residency, and which implies that you pay taxes in Cyprus, and you can claim the non-dom regime, which I will elaborate in a minute. So these are the basics, and it's very important for you to understand them. Let me just take you through a quick example. I know it sounds simple, but it's best if we take you through some very simple examples. Irina moved to Cyprus on March 24. Yeah, so she spent like 9 months in the island. She is considered a Cyprus tax resident. Irina got 70,000 euros from her Cyprus employer, but she worked abroad for 3 months, 2 months in this case, earning another 15K. In this example, Irina is liable to pay tax in Cyprus on her global income, as I said before, which is 85,000. Now, if she actually gets to pay any tax, it's a different story, because you need to look at the double tax treaty, if applicable. You also need to see if you paid any taxes abroad, which you can claim in Cyprus. I don't want to lose you. Just get the basics, yeah? That you are taxed on your worldwide income when you become a Cyprus tax resident. Now, on Pavel's example, on example B, Pavel came in October, November, December, 3 months in the island, less than 183 days. He will only have to pay tax in Cyprus on his Cyprus sourced income that we've just briefly mentioned. Again, it sounds simple, but it's a very important subject or matter to know. Now, moving on to the types of income. It's not nuclear science. Some people get confused, but actually it's that simple. There's so little types of income a human being can earn. It's the most frequent we see is the salary income. We offer our time to an employer and he pays us salary. Yeah, this is the most common type of income people earn. You can also get pension income from the public sector, the government, or private pension schemes. This is usually when you retire. You get rental income when you own real estate, either in Cyprus or abroad. You lease it out and you get rental income in return. Dividends, when you own shares again in your own company, or in shares or in NVIDIA, in Apple, in Google, or any company, either in Cyprus or abroad. When that company pays you dividends, it's a type of income, yeah? And there's a reason I'm clarifying this, and you will see that in a minute. Interest income, you own corporate bonds or government bonds, and you earn interest income, or even cash deposits nowadays. They pay out some interest income. This is taxable in Cyprus, assuming you're a Cyprus tax resident. It could also be taxable abroad, depending on from where you earn that income from. And there's also income from doing business. This is, again, quite common. You can be an employee in a company working a 9-to-5 job, and then you do your part-time consulting business, or selling souvlaki down the road. Anything, any business, anything that emanates from doing a business, it's called self-employed income, and is also taxable. Now, there's some not so common types of income, which we see. People trading in shares or derivatives or FX. We see benefits in kind, which is a type of income which is taxable. We see redemption of life insurance. We see ex gratia payments, which comes, it's Latin for in kind, not in kind, in as a gesture of goodwill, something like that. I mean, but it's again a type of income which is usually not taxable. In kindness, I think it's the exact definition. So these are the main types of income you should be aware of. And why you should be aware of is because each type of income is taxed differently. And this is the next slide. Yeah, we're going to be explaining how each type of income is taxed. So let's start with the basic one. Salary income is taxable under income tax. So is pensions and rent and self-employed income and benefits in kind, meaning that if you get 50K from an employer in Cyprus, yeah, and you also rent out your flat, the two incomes are both taxable under income tax. So you add them up, and then you tax them progressively 20 to 35%, meaning that anything above 19,500. You can see the small table is not tax. It's up to 19,500. Sorry, is not taxable, and then it progressively goes up according to each rate as you see it. So in simple terms, if you get 28,000 euros, yeah, you will only get to be taxed on 9,000 on the 8,500 euros, 8,499 to be more precise, at 20%, and then it goes up accordingly. You will see in a minute that this, with the proposed tax reform, might change, but I'm gonna keep the suspense going. So salary income, taxable under income tax. Split in your mind the types of income and how each of that income is taxed. Yes, see, it applies to all types of income. In brief, it's 2.65% for employees and 4% for the self-employed, and it's capped at 180,000. So in an extreme example that someone gets 250,000 gross salary, he will only pay YESI at 2.65% times 180,000. There are some people that can be exempted from YESI, believe it or not, but you need to be insured in another similar, let's say, healthcare system in a different country, and you need to apply at the Ministry of Health for a certificate. I think it's called the A1 or S1 certificate. Not so easy to get it, but it's doable, and we've seen it happen. So yes, it applies to all types of income. Moving on to SDC. SDC stands for Special Defense Contribution. It's a tax that applies in Cyprus back from 2002, and basically applies on only certain types of income and only for the Cyprus domiciled persons. I will explain what this means in a minute, but it does not apply for the Cyprus non-doms, which in brief are the non-Cypriots, let's say, but I'm going to get there. So SDC applies for rental income, dividend income, and interest income. Now I'm taking you back to the reason I've explained the types of income to you, yeah? So that's the reason. Different taxes apply according to the type of income. I know I'm becoming repetitive, but it's crucial to get it right. So SDC applies a 2.25% effective rate on rental income, 17% on dividend, and 17% on interest. It used to be 30% on interest, but it changed as of 1st January 24. Exemptions, as you will see later on, it's for the non-dom and for the non-Cyprus tax residents. So if you're a non-Cyprus tax resident, it does not apply to you. If you're a Cyprus tax resident but non-dom, it also does not apply to you. Social insurance, I'm sure you all know it. It applies mostly on salary income and self-employed income. The rate is 8.8%, and it's capped, same way as YESI, at 66.612 gross annual income. So in simple terms, if you get 100K salary, you will only be paying social insurance up to 66K, 66 plus, at 8.8%. And social insurance is expected to go up and reach, unfortunately, is expected to go up and reach up 10.3%, but it's going to be down in not so near future. Capital gains tax is the last main tax we have in the island. Unlike other jurisdictions, in Cyprus, it does not apply when you make a profit on shares or when you buy a share at €3, you sell it at 5, you make a profit of €2. There's no Cyprus capital gains tax on that. But capital gains tax in Cyprus does apply when you sell Cyprus real estate, Cyprus situated real estate, or when you sell shares of a company that owns Cyprus real estate. And it's applicable at 20%. You will not see it in your tax form, this tax, but it's good for you to be aware of it in case you ever decide to sell a real estate in Cyprus. So I promise I'm going to touch the subject of non-dom. this is one of the really big benefits we have here as a jurisdiction. We have one of the best non-dom tax regimes in the EU. In brief, there are two types of non-doms: the non-dom of origin and the non-dom of choice. The non-dom of origin, usually, which is the vast majority of people, it applies to the non-Cypriots who come in the island usually for the first time. Their father is non-Cypriot, they are non-Cypriots themselves, and they simply apply for the non-dom regime as a non-dom via origin, let's say. And there's the non-doms of choice, which it's a bit more complex, but it applies to it could apply to Cypriots as well, born and raised in the island, but they left the country for like 17 plus years and they came back. These are the non-doms of choice. The vast majority, again, is 0.1. And what's the benefit? I said before, we have one of the best non-dom regimes in the EU, in the world, actually. Non-doms don't pay SDC on interest, dividend, and rental income for a period of 17 years. There's non-doms that you actually pay money to be eligible. In Greece, it's 100K. Portugal has a good non-dom. UK had a really good non-dom system, but they've changed it a bit and it's not so attractive anymore. But this is very good for you to know in case you're non-Cypriots in a nutshell, because you exempt yourself, assuming you're a Cyprus tax resident and a non-dom, on any tax on dividends, interest, and rental income. I'm going to pause for a minute. And I promised to keep things simple. I hope I did. I hope I wasn't speaking too fast either, but I'm going to pause for a couple of minutes, see if you have any questions, not specific to your case, please, but any general questions I'll be happy to answer before we go to the hot topic of tax exemptions.
Marios, there's some questions in the Q&A. Someone is asking, could you please advise on taxation basics related to income from broker accounts, dividends?
Okay, you're going to go to the exemptions in a minute, guys. Let's keep the questions on what we've discussed so far. So I presume there's no questions on the types. We've discussed the types of income. We discussed how each income is taxed. We've discussed the non-dom and obviously the Cyprus tax residency. And also we discussed the important tax forms. I see a hand from Chloe. Yeah, it's easier if you raise your hand, guys. So Chloe.
Hi. Well, the problem that I have with the IR59, as you mentioned, that now that everybody has to have a TIC number. What if someone comes to Cyprus, a European Union citizen? All right, he comes first time in Cyprus and he comes to work. We try to explain him what he needs to do, but in order to do a yellow slip, you need 3 months. You need to do the yellow slip and after apply for a TIC number. So how this person is able to be registered in the system, and as a company, I will not have an issue when I submit the forms and through the tax for all and everything, is something that we've been asking for a long time about this. And my other suggestion, why can't we do it like once we have the social insurance number, which is much easier to register, then do the TIC on top of the social insurance as a reference. Because we're not able to do this IR59 form, and especially the companies will have a lot of issues.
Okay, the form 59, it's different from the tax code.
Yes.
So just to answer your question, you had two questions here. The first one, I don't know the answer either. I'm going to be honest. It's something that we hear a lot, especially now with the problem with the employer's return. I think that's what's triggering your issue. It's something that we expect an announcement or some sort of guidance, because yes, it's obligatory from the employer's side to submit the employer's form, and to do that you need a TIC for all employees, but not everyone has, and you cannot legally oblige him to get one. it's a different story. I cannot answer it, unfortunately, but soon we might have something. On your second question, to combine it with the social insurance, I'm not from the government, but it's a good point. I guess if anyone from the government is listening to us, they can consider that. But let's keep it on the slides. Chloe,
Right.
I'm happy to discuss this later on. So any other questions, guys? Feel free to raise your hands. To prove the non-dom, you need, basically, if you're a non-dom, you need to apply to get the non-dom certificate. You can ask any tax professional to help you out, but that's how you officially become a non-dom. It's not just because you actually are a non-dom. You have to have the non-dom certificate, which, in order to get it, you need to submit some forms and other information to the tax office. They check it, and if you're okay, they issue the non-dom certificate, which applies for 17 years again, and you state that in your tax form when you get to submit it. Anything else? Good. All right, let's jump to the next subject of the 20 and 50% tax exemptions. Aris will be taking you through, but before we go there, I'm going to show you a quick video that we did, about 40-50 seconds, and then I'm going to pass the word to Aris, and then I'm going to get back to you again. So, can you just someone to confirm if you can hear it well? You can, yeah? No. How about now?
Cyprus and looking to find more information about local taxes. Perhaps you've heard that there might be ways to legally reduce your tax costs. You're in the right place. This quick video will help you understand the 2 different tax exemptions specifically available to people relocating to Cyprus from abroad. Let's start with the 20% tax exemption. If the date of your employment in Cyprus is before the 26th of July, 2022, and you were outside Cyprus the year before, or if the date of your first employment in Cyprus is after the 26th of July, 2022, and you were living and working outside of Cyprus for at least 3 years before, then you may be entitled to reduce your tax by using the 20% tax exemption. Let's also explain the 50% tax exemption. If the date of your employment in Cyprus is before the 1st of January, 2022, your annual salary is over €100,000, and you are outside Cyprus for at least 3 years before, or if the date of your first employment in Cyprus is after the 1st of January, 2022, your annual salary is over €55,000, and you were living outside of Cyprus for at least 15 years, or 10 in certain cases, then you may be entitled to reduce your tax by using the 50% tax exemption. Different rules may apply for employment dates, starting within the period of 2016 to 2021. For more information, visit www.taxapp.cy.
So, thank you for listening on this quick video. I'm passing it on to Aris. Aris, feel free to start sharing.
Okay. Hi, everyone. So following out to the short video, it's a complicated area, the tax exemptions, but we try to make it as simple as possible, visually friendly, with the key information you have to have in mind. There's more complexity because usually details vary on a case-by-case basis. Therefore, if something is not clear, someone can do an assessment on their case and they can go with a ruling. We will discuss this later. So let's start with the 20% exemption. So we separate these with the old 20% and the new 20%. The law changed for 22 onwards. So the important thing to have in mind is the date. So the key date for the 20% exemption is any employment that started before the 26th of July 2022 or after the 26th of July 2022. Let's take the old 20%, which is for any employment starting before the 26th of July 2022. The main requirement for the old 20% exemption is any individual who was not resident, a Cyprus tax resident in the year prior to his first employment and commencement of his employment in Cyprus. So for example, if he started employment in Cyprus in 2021, he must not have been a Cyprus tax resident in 2020, in the year prior to commencing his employment. As simple as that. In that case, he would be able to qualify for the 20% for 5 years, 20% of his gross salary. We will see an example on the figures afterwards. And he can claim this in the January following the year he started his employment. That is, if he started in 2021 throughout the year, he can claim it from January 2022 onwards for the tax year 2022. And it applies most importantly to any employment, not just the first employment, meaning that he can switch employments. The switching employment or not is a very key thing for the exemptions, as well as the main conditions on whether he has to be a Cyprus tax resident or not in this period of time. So now going to the new 20%, which is any employment that started after the 26th of July 2022, the requirement changes to is for any individuals who have resided and worked abroad consecutively for 3 years before starting employment in Cyprus, as opposed to the old one, which was not having to be a Cyprus tax resident. It was simple. Now you have to have worked and lived abroad for 3 years consecutively before taking up a job in Cyprus. The same logic applies on the gross income. It's 20% on the gross income. This has been increased to 7 years. You can claim it for 7 years, and you can claim it again from the January in the year following the commencement of your employment. The main difference here is it doesn't apply to any employment anymore. It applies only to the first employment you take up in Cyprus. Let's look at an example. The old exemption, we have George who moved to Cyprus and started work on the 23rd of January 2020. Here in the salary of 35K. We're not taking into account the transitional rules, which we'll explain later. So started job 33 of January 2020. So that's before the key date we mentioned, 26th of July 2022. Immediately we go to the old 20%. In that case, he will be able to claim the 20% on his gross salary, which is 35. That's a 7,000 benefit he gets. He will deduct it from his gross salary. He will only be taxed on the 28,000. Important to note, there's a restriction. It has to be the lower of 20% on the gross salary or 8,550, meaning that if 20% on the gross salary exceeded 8,550, it would be capped at that. So he couldn't be claiming more. So this, he can claim it in the Cyprus tax form once the time comes. But as Marios earlier mentioned, it's very important to complete promptly the Form 59, TD 59, to hand it over to the employer, let them know we're claiming the exemption so that they're able to take it into account and do not deduct higher income tax, pay as you earn is called, from his salary. Otherwise, if they do not take it into account, then they will still claim it in their tax form, but they will be applying for a refund, and refund can take time. So it's better to inform their employer in advance at the beginning of their year or at the beginning of their employment. Now, the new 20%, as an example here as well, they started on the Helena started on the 27th of February 2023. It's after the key date we mentioned, the 26th of July 2022. So we're going immediately to the new one. And she lived and worked in the UK for the previous 5 years. So she satisfies it, the main requirement, which is living and working abroad for 3 years. The detail is here, it has to be continuous, but that's another complexity. We can look into detail at another time. Now the new exemption applies with the same logic as the old one on the 20% on the gross salary with the same cap of 8,550. And you can claim it in your tax form and also let your employer know through the Form 59. This is for 7 years, as discussed. It's an increase of 2 years. Now, moving on to the 50%, that's the same logic applies in the key dates. So to be able to see whether you qualify for this, you must have started work in Cyprus after the 1st of January 2022. So if you started before that, you're falling under the old regime of 50%. If you started after the 1st of January 2022, you fall under the new regime of 50%. Now, in the old 50%, the requirement was that you must not have been a Cyprus tax resident in the 3 out of the last 5 years in Cyprus. And your salary must have exceeded 100K, 100,000. The same logic applies. It applies to your gross income, the 50% on the gross income. So here will be 50,000. And here it's for a longer period, it's 10 years. Another difference from the 20%, it starts in the year becoming eligible, meaning that if you started work, say in 2021, you could claim it immediately in the relevant tax year instead of waiting to January in the next year to claim it, as long as your income exceeds 100K in the next 12 months. And similar to the old 20%, it applies to any employment. You will be seeing some examples later. The new 50%, there are 2 of them, but we'll explain. Is the requirement basically the latest one, which is the one that applies, is one must not have been a Cyprus tax resident nor worked in Cyprus for the past 15 years, meaning that if you started employment after the 1st of January 2022, for the previous 15 years, you must not have been a Cyprus tax resident nor worked in Cyprus. In some cases, 10 years also will apply. And now the income has decreased. So instead of 100K, now it's okay to satisfy the requirement if you earn more than 55,000 in the first or the second 12 months, or if you reach the 55,000 in the first or second months. Meaning, if you started work, say in 1st of March 2022, that's the 1st of March 2022, in the next 12 months after that date, or the first or the second 12 months after that, you must have earned more than 55K, either the first 12 months or the second 12 months. Now, it applies on the same logic on the gross income, and this is claimed for a longer period, even longer period of 17 years. Similar to the old one, it starts immediately. It starts in the year where you'll be eligible. So in the tax year you will arrive and start work. If you're eligible, it starts from that tax year instead of the January following the next year of commencement of your employment. Now, the main distinction here is that if you are away, if you're not a Cyprus tax resident for 15 years plus, you can switch. It applies to any employment. So you can switch employers. However, if you were away for 10 to 15 years, between those years, it will only apply to the first employment, which is very important. We'll see an example and later references to this. So some examples of the old 50%. As we said, the key date is the 1st of January 2022. So George moved to Cyprus and started work on the 23rd of January 2020. They've earned 120K. So they seem to satisfy the requirement. It's the first time in the island. So the requirement was 3 out of the last 5 years. They must have been outside Cyprus, which since it's the first time they satisfy it, and the employment income exceeds the 100K. It's 120K. So it's clear they're able to claim the old exemption. On the gross income, they can claim it, as we said, in their tax form and claiming through the form TD59 by informing their employer so that they can deduct it from the salary. Now, the new one, the new 50%, as we said, is for any employments after the 1st of January 2022. In this case, Helena moved to Cyprus on 27th of February 2023. She lived and worked in the UK for the previous 16 years and earned a salary of 60K. So let's see, she moved after the 1st of January 2022. She lived and worked outside Cyprus for the past 16 years. So she was outside Cyprus for more than 15 years. And her salary, as we see 60K, it exceeded 55K. So she seems to fulfill this condition. Now, in this case, if it was 10 to 15 years, she could still qualify, but that will be only for the first employment. This is the main difference between the 10 years and the 15 years and the new 50% exemption. And as we said, patient can claim it on the gross salary through her tax form and by informing her employer in advance. Now, this is a bit more complicated, the transitional rules, so we were not going to go into much detail, but the main idea is that anyone who's been claiming the old 20% or the old 50%, which we mentioned here, the old 50% before the 1st of January 2022 and the old 20%, if they started employment before the 26th of July 2022, as long as they fulfill the new 50% criteria, which the new 50% criteria is they have to be outside Cyprus for more than 15 years, and the employment must have been 55K in the first or second 12 months. As long as they fulfill that, they can transition from that old 20 and 50% to the new 50%. The advantage is that they can claim this 50% for 17 years instead of 10 years, which was the old 50% and 27 years, and the old 20%, which was for 7 years. So the important thing just to have in mind, high level, but we have to see case by case, so as not to confuse you, is that the employment must have started between 2016 and 21. It had to be continuous. So someone must have been in Cyprus between this period. They must have worked continuously. And if there's a potential that if it wasn't continuous usually is interpreted as not having been unemployed. It doesn't matter if you switch job, but it matters if there were certain days that you didn't work. This is a big issue in practice. So you could potentially lose this transitional eligibility. And so the first one is you must have worked in Cyprus continuously to between up to 2021 and between 2016 and 2021, and your salary must have exceeded 55K, or if it was lower in the first 12 months, to have increased to 55K between this specified period on the 26th of January 2022 and 26th January 2023. Along with the last and one of the main conditions of the new 50%, they must have either been outside Cyprus for 10 or 15 years. Now, again, if you qualify to jump to transition to the new 50%, you can still claim the 50% on your gross employment income for 17 years. And have in mind, if you were outside Cyprus for 10 or 15 years, it matters. So if you were 10 plus or 15 plus, 10 between 15, you can lose the benefit if you switched employment. It applies only to the first employment. If you were 15 plus years abroad, you can switch without losing the benefit. Some example is Andreas moved to Cyprus on the 23rd of January 2019, and he earned more than 60,000. So he was claiming the old 20%. As we remember, the old 20% applies for any employment starting before the 26th of July 2022. So he was claiming the old 50%. And it seems that it's the first time in the island, so he was more than 15 years away. He was here in more than 55K, that he would be eligible to claim the new 50%. So he can jump from the old 20% to the new 50% with the additional benefits of claiming it for 17 years. And he must inform his employer, as we discussed. The other one is that we have Marios, who moved on the 23rd of January 2019. He earned 50,000 in 2019, so he earned less than 55K, which is the main requirement for the new 50%. But he earned 60,000 between the period we discussed, this period. So it increased to 55K plus from this specified period. So in this case, he would be eligible still to claim the new 50% and jump as well. So we can go in a lot of cases, case by case. It depends, so as not to complicate you and confuse you. These are some high-level examples, but the devil is in the details. So each case is important to review in detail. Now, some frequently asked questions regarding exemptions we receive usually is firstly, am I allowed to switch employment and carry on claiming the tax exemption, or do I lose the right? So there's some people who may have, moved abroad and came back, In general, the answer is you could do that, because for the old 20%, the old 50%, the new 50%. If you revisit the slides, we said that, for example, the old 20% applies for any employment. The new doesn't. It only for the first employment. And the 50% exemption, again, the old one applies to any employment, and the new applies to any employment as long as someone was away for 15 years. Now, continuous employment, referring to the period we said up to 2021, between 2016 and 2021. Usually we have people who may have, have issues with that continuous definition. In practice, and according to the guidance, there must be no employment. There's a circular on this circular for 2024. There must be no employment gaps, regardless if someone switched employers or they worked for a Cyprus tax resident without a permanent establishment abroad. They took a maternity, paternity, or sick leave. It's okay as long as they didn't have an employment gaps. Now, what's the employment gap in practice is vague. Someone can go with a tax ruling to verify their case. Strictly speaking, it must be zero, so no employment gaps, no days that they were unemployed. So is there a difference if I spend 10 years or 15 years outside Cyprus before starting my first employment? Yes, it matters, as we mentioned. With 15 years plus, you're allowed to switch jobs. Only in general, for the 50% exemption, if you spend more than 15 years, you're allowed to switch jobs. But when you spend less than 15 years, then it only applies for the first employment. Another question we get is whether nationality matters to be able to claim an exemption. It shouldn't matter. The same rules apply for everyone relocating to Cyprus, regardless of nationality, even naturalization or obtaining a separate citizenship. The law doesn't distinguish between nationalities. And of course, if this is a complex area with huge risk and huge benefits, so it's wise to seek professional tax advice if your case warrants this. To test it, a professional tax advice will offer you more assurance. Obviously, for absolute certainty, a tax ruling is recommended if someone wants to get an accurate and binding decision from the government, from the tax department on their case. Now, passing on the slides to Marios. I don't know if we can take some questions or do it later.
I'm sure people will have questions on that. On the 50 and 20%, I mean, if you want to just pause for a minute, it's a complex subject, guys. So should we take a couple of your questions? Anyone who, Chloe again.
Hi again. What documentation do they need in order to get either the 20 or the 50%? For example, if someone is working in Dubai for many years, in Dubai they don't pay any taxes to prove or something. What is the proof that we need in order to claim it? I'm coming to Cyprus now. I get like 60,000 a year, for example, in order to be eligible for the 50%. But how they will check in the government that I am eligible, that I didn't use it in the past or something? For example, I'm 20 years old. I work in a while I was doing my university, I was having some money there. Then I left, I went abroad to Dubai, I work, I came back after 10 years, let's say, 30 years old.
We got the question, Chloe. It's basically, how can I prove as a taxpayer that I was living abroad, basically,
yes,
and that I'm eligible for the exemption? We see it happening a lot because the tax office took a decision, let's say unofficially, to reject many cases of 50 and 50%, with the intention of the taxpayers objecting and then on sending evidence to the tax office, basically proving to them that they have not been living abroad and that they now came to Cyprus following an X number of years. I've seen cases asking for previous rental agreements, if in the UK, for example, or previous employment contracts with their previous employer, showing that it was, again, let's say in the UK. Aris, I don't know if you've seen anything else.
Usually, yeah, they also request other tax residency certificates if they were residing and living abroad, university certificates. They know, I mean, they have the track record if they already submitted, taxes and other contributions, so they can check.
So it's on the taxpayer to prove, basically, in any way possible. Usually it's this evidence that the tax office requests that they have not been tax residents the year before, or in certain cases, even up to 10 or 15 years before. Any other questions? Chloe, I hope I've covered your question. Any other hands? Katerina?
Thank you very much. I have a quick clarification question. What's about this 10 and 15 years outside of Cyprus? Let's say to keep this 50% discount, you need to work for 15 years, or it's enough just to live outside of Cyprus for 15 years?
Just to live outside, not be a tax resident in Cyprus for 15 or 10 years. The way I have it in my mind is that the more you are, the better the 50%, let's say. In the sense that if you're more than 50 years outside Cyprus and you come to Cyprus and you can claim it, you can switch employment. If you're between 10 and 15, you can still claim it, but you might lose it if you switch employment. This is a very, very big
And thank you very much. So
in my mind.
I just want to clarify, this is condition of just being outside of Cyprus, not being employed outside of Cyprus for this
No,
period.
it's you must not have been in Cyprus physically nor worked. The new circular avoids the definition of first employment for temporary, even working. Previously, used to be the case that if you worked for up to 3 months, it was okay. But now, for 15 years, you must not have been a Cyprus tax resident, nor have worked in Cyprus.
Okay, thank you very much.
Sorry, guys. Sorry to jump in. It's Artemis. Maria, Ari, maybe let's take a look at the Q&A section because I see many questions coming in. It would be good to go through those as well.
We can, of course, but it's easier if someone just raises their hand. Ryan?
Yeah, hi. Let's say I'm eligible for 50% today, but then I leave Cyprus for 1 year, for example. In 1 year, I come back. Am I still eligible for 50%?
Yes, that's the first question in the FAQ. Regardless that if you were away or not, so you come back. As long as you were eligible to begin with, it doesn't affect your eligibility.
Okay. And let's say that I earn less 1 year than the threshold, but then I increase it over the threshold in the following year. Will I still be eligible then?
No, you must. You mean the threshold of the 15 years?
Nah, the 55,000 euros I'm in.
Okay, the 55K is for, you have to check first the first 12 months since you began your employment or the second 12 months. That's the most important thing. If you're talking about the new 50%, after the 1st of January 2022.
Guys, these rules are really complex and each case should be examined separately. And you can see why, yeah? There's 2 circulars, 20 pages each, and the law is 3 pages. It's a complex subject, but just for the purposes of this seminar, keep the basics. And obviously you need to seek professional advice when things change. And any other hands, or should we go through the questions? Tatiana?
Yes, I asked you about rental income. Is not qualify for tax exemption, correct? It's only for employment income.
Correct.
Okay. And another question was about, is it applicable if I work not on working visa, but on blue card?
It's irrelevant. The tax exemptions are irrelevant. We get that a lot, and Cypriots can claim the tax exemptions if they've been living abroad for many years.
Okay.
Non-Cypriots, and it's completely irrelevant. And I don't know why some people get this wrong advice. It has nothing to do the citizenship or the residency or the residency. It does. Sorry, the citizenship or passport or whatever. It's completely in law.
Okay, thank you.
A couple of other questions going through the Q&A is not so easy, and I want to just touch at least briefly on a couple of other slides before we leave you.
There's some specific ones, but we suggest not. We can't give advice on specific because it's a case by case. It's best if you do this with a professional. Again, on case by case, it's not professional to advise on specific. We need the whole complete picture to be able to advise.
We don't want to do that exactly because one, we might give you the wrong advice, and two, there's people that, in all honesty, might not really care, and I don't want to be wasting their times. Happy to discuss things after the call. Tatiana, before we move on.
I forgot one question. I have.
Of course.
When I submit my TD form, do I need to submit as well some supporting documents for dividends and rent? Nothing?
Nothing, no. You just need to keep them for 6 years. That's what the law says, because the tax office might come back and ask for them.
Okay, thank you.
So, guys, because I don't want to keep you long, we're almost to the end. This rule is very important, the 90 days rule. Not many people know it. Yeah, give me 1 minute. In brief, this rule says that if you are a Cyprus tax resident, meaning that you spend more than half a year in the island, or 60 days with the special rules as well, then assuming you work for 90 days plus outside Cyprus for a non-Cyprus employer, yes, but not more than 182 days because otherwise you lose your Cyprus tax residency, then that income could be exempt from tax in Cyprus. You don't even need the double tax treaty. You don't even need to pay any tax. This is crucial because if someone comes, let's say, for 7 months in Cyprus and he or she was for 5 months abroad, then this 90 days rule, if it can be claimed, implies that that income is automatically not taxable. Now, if it was 11 months in Cyprus and 1 month abroad, you cannot apply for it because you need to spend 90 days and above outside Cyprus for a foreign employer, not a Cypriot employer. This is something that not many people know, but we see it happening and being eligible quite often. Double tax treaties, I don't want to lose you, but any time you get 2 jurisdictions involved, like the example we said before, you need to look at the double tax treaty. Some people could be, each country has its own residency rules. Some people might have a dual tax residency. If there's a double tax treaty between the 2 countries, then it acts as a tiebreaker and you can review the treaty and perhaps it will define where, to which country or jurisdiction that individual is tax resident or not. There's so many other reasons that you need to look at the double tax treaties when you have, again, 2 jurisdictions involved, meaning income from abroad, let's say, or any tax residency, as I said before, issues. Now, remote work income, we also see a lot of examples. Ari, do you want to, because you see these more often than me, do you want to tell us some examples and when you see that?
Remote work, yeah, we have a lot of people who want to submit their tax form. They're based in Cyprus tax residents, and they're working for a foreign-based company. Usually, with this case, they can submit their taxes, obviously, but in order to be able to proceed properly, they have to indicate any contributions they pay in the country where their employer, the company, is located. Has to be SE and social insurance. For the form to allow you to submit, you have to declare your ESE at least, your social insurance at least, or your ESE. Social insurance is required in this case, because if you're an employee for a foreign company, they pay contributions on your behalf. So you must submit social insurance to be able to proceed to, and this is a practical issue, to submit the Cyprus tax form. And in case you already pay ESE or something similar, health contributions, you're able to get an exemption if you get the paperwork we discussed earlier. But this may create also some permanent establishment issues with your employer, because usually when you are employed by a foreign company and you're in Cyprus, then that company may have some exposure according to the law to create a branch here, employ you through here so that they can pay social insurance contributions on your behalf to Cyprus, etc., etc.
So just keep the essence that when you live in Cyprus, but your employer is in the UK again or in any other country, it could be that you have to pay taxes in that country and in Cyprus, and it could be also that your employer is at risk. Just have that again as at the back of your mind. And I'm going to move on to how you can pay less taxes, another crucial slide. There's obviously legal ways to reduce your tax cost, and this is there's not so much flexibility. For example, not when you're an employee, not all expenses of yours are tax deductible. If you go to a supermarket or your rental expense, obviously you cannot use this expense to reduce your tax. You might be able to, by the way, on the upcoming tax reform. I'm talking about the rent. We're going to talk about this in a minute. But as the law stands, if you pay if you donate money to an approved charity or professional subscriptions, like if you're a lawyer or an accountant, these amounts are tax deductible. They can reduce the amount of your annual tax. And if you have a life insurance or a health insurance scheme, if you pay, let's say every month a percentage of your salary to the provident fund of your employer, in simple language, this is tax deductible as well. So it's a good idea if your employer offers this scheme, the provident fund scheme, to contribute as well, assuming you're on the taxable income bracket. And when I said before about the Form 59, if you have any life or health insurance, that's where you have to declare them. Otherwise, how would your employer know about them? They need you to inform them via the Form 59, as well as your 20 and 50% tax exemptions, donations, etc. So these are the main ways to reduce your tax, and it's good to also state on these cases that the deduction is not unlimited. It's capped 1/5 of your taxable income. In other words, if you decide to have a life insurance of 10,000 a month and you get 50K a year salary, it doesn't imply that you will be paying zero tax. There's a cap, a limit on 1/5 again of the taxable income. Now, we promised to briefly elaborate on the tax reforms. I'm going to hand it over back to Aris. It's quite interesting. This has not been yet enacted into law. It's draft legislation as we proposed. It's proposed amendments to the existing law as we speak. They still have to go through the parliament, and if our MPs vote it, if it gets the majority of the votes, then it might be enacted into law and apply, most probably as of next year. So, it's good to have an idea of as we speak, but bear in mind that it's not yet applicable, and I emphasize that. Aris, do you want to take us through?
Sure. So we thought to include this, it's important for you to know what's coming. So the new proposed tax reforms touch on a lot of laws: income tax law, capital gains law, special defense contribution law, procedural law of collecting taxes. So we decided to just include the main ones here just for your review. The proposed tax bills were announced on the 18th of July 2025, and now they're up for public consultation up until the 25th of August. The plan is for them to come into force at the beginning of 2026. Now, the major changes is that the tax residency is expanded, meaning that even if you spend less than 183 days, even less than 60 days, which was the more restricted interpretation of the tax residency to determine if you're resident or not. It means that, however, regardless of the number of days you spend in Cyprus, if it's deemed that you have close economic ties in Cyprus, you can still be deemed that you're a Cyprus tax resident and be taxed on your worldwide income. Of course, this creates other complexities which they have to be defined in detail. The so-called crypto that everyone's talking about, how it's taxed or not, it's specified that it can be taxed at a flat rate of 8% in case of a sale, gift, or exchange or payment of crypto, and exempting any crypto income arising from mining. Now, in terms of tax deductions, it includes 1,000 euros per child for every family. 2,000 euros tax deduction allowed for single parents, and these are capped to economic criteria. That's 80K for a married couple and 40K for a single parent. And any interest paid on a housing loan for the main dwelling or rent in the main dwelling will be allowed at 1,500 euros. And 1,000 euros would be allowed per parent per person for any energy upgrades expenditure for the main house, for the main dwelling. Now, regarding stock options, this includes a flat rate taxation of 8%, lower than the personal income tax rates. Any ex gratia payments that Marios mentioned earlier, where they used to be not taxed, now it will be taxed at a flat rate of 20% with a tax-free amount of 20,000, meaning anything above 20,000 of ex gratia payments will be taxed either at the flat rate of 20% or elect to be taxed on the standard rates, meaning you can add it in regular income and applicable rates. Now, the tax-free bracket is proposed to be increased from 19,500 of gross income to 20.5K. That's 1,000 euros increase. And also the progressive brackets are increased here. You can see from 20.5K to 30K, 30K to 40K at 25% tax rate, 40 to 80K at 30, and anything above 80K to be taxed at 35%. So there's an increase in both the tax-free threshold as well as the brackets. Increases also in the capital gains thresholds in case of disposing a main dwelling, your main house, from 85K to 90K, and 20K from 17K for the disposal of any property, meaning that you can claim this as a tax-free amount and you pay capital gains on anything above. According to the calculation of capital gains, there's a special way of doing it. Now, dividends, the main change is the 17% will be reduced down to 5% with some criteria subject to the conditions set there. There's some conditions when this will apply. So all in all, these are the main tax reforms proposed, and these are open for a public consultation.
So thank you, Ari. So in brief, sorry, I was on mute. Sorry, guys. Yeah, in brief, if this is enacted into law, you get a tax deduction if you have kids, if you pay loan or a mortgage, if you upgrade your house regarding energy efficiency, like solar panels, I guess. Crypto is taxable, and the brackets change, which they become more generous, I would say, because the 35% applies for above 80, may apply for above 80K, and not above 60 as the law currently stands. So let me share my slides, Aris, or stop sharing, please. Am I sharing now? Yeah. So I'm not going to take you through. This is the tax form, by the way, and we were planning of taking you through the tax form versus what taxapp has to offer, but you can see that from our website at taxapp.cy. There's an easy how it works guide which can explain things, because I've decided it will be more useful if we just tackle your questions as I promised to Artemis and Nadia, and obviously to you guys. So I see quite a lot of questions. Let me try and answer some of them. I'm going to start with the oldest by the first questions, anonymous. Could you advise on taxation basics related to income from broker accounts? I think we already covered it. If you have a broker account and you earn dividend income or interest income, it's exempt if you're a Cyprus. It's usually taxable under SDC, yeah, at 17% both. But it's exempt if you're a Cyprus tax resident and non-dom, or a non-Cyprus tax resident. As simple as that. If you sell any shares and you make a profit, that profit is not taxable regardless. So I think I covered this question. Christophoros, can we have copies of the slides? Yes, I think it's been recorded also. TechIsland has our okay to provide it to you. An employee base salary of 16K, and as of end of July, but there's a possibility. Yeah, so if your income is above 19,500, which in this case includes salary income and self-employed income, then yes, you need to submit a tax form, 1. And 2, how is taxable, how is treated, we also stated in the slides, both will be subject to income tax. You add them up, and the progressive rates apply 20 to 35%. Anonymous, in case of unemployed family members, do they need to submit any documents? No, as we speak, because they've got no income. I presume they've got no gross income above 19,500, since they're unemployed anyway. Can you claim 50% exemption on your Cyprus income is below the threshold, but the worldwide income is over? Good question. No is the answer, because the exemption applies on salary income only. That's why we went through explaining the types of income. Good question though. Gadia, if someone is a non-dom, Cyprus citizenship, yeah, would non-dom status stop at this point? Irrelevant again. The exemptions or the non-dom, okay, for the exemptions, it doesn't matter at all. Now for the non-dom, you need to see if you're a non-dom of origin or of choice. That's what we said, if you remember. And in this case, passport of the father does matter. Now, if you claim it, if you're a non-dom by origin, let's say, and you become a Cypriot, it doesn't affect your non-dom status. You need to see at the point that you claim the non-dom what applies to you, the criteria. And remember that even Cypriots can claim the non-dom regime, assuming they left Cyprus for 17 plus years and then they came back. But again, obviously, you need to seek professional advice. Is non-dom applicable to non-CY citizens who are... To get the non-dom, guys, you need to be a Cyprus tax resident. This is a must. All right? And again, to see if you're eligible, it's the 2 types that you need to see if you're eligible under the specific type.
So yeah, I'm Marios, sorry for this one. It's best, you must be a Cyprus tax resident. If you qualify to become a non-dom, it's best to do it as soon as possible, because you have also other stamping duties which can increase if you leave it. So for example, if you qualify to 2021, it's best if you do it as early as possible, assuming you have the income to justify this, because you have to stamp your documents as well. So that's another consideration to have, and stamping duties can be really high if you leave it.
There is no income, Aris, on the non-dom to justify, you said. Non-dom, come on mute. Non-dom can apply regardless of whether you have income or not, yeah?
No. I mean, I'm asking the question: when is best to apply in the year that you wanted to apply? In practice, we have this other question a lot. It's best to apply if you have the income to get the exemption. It's best to apply as soon as possible. If you don't have it, you have to see. I mean, you pay less if you do it as early as possible. I guess from that's what I mentioned from the stamping duties. If you leave it for a couple of years, the stamping duties can be really high.
All right. Yeah. In brief, guys, if you earn dividends or interest, then or even rent, it's good to explore whether you're a non-dom or not. If you just earn salary income, then I guess the non-dom is irrelevant because it does not exempt you from income tax. It only exempts you from SDC. Tatiana question: how's the tax determine non-dom status? Do I need to submit any? Yes, you need to submit. There's two specific forms, one for the non-doms of choice and one for the non-doms of origin. But we strongly suggest these forms are prepared by a tax consultant. You obviously can do it yourself. How long does it usually take to get a non-dom status? From the application date. Mari's couple of months, I guess. Usually.
Yeah, 2-3 months average. Depends on the workload of the tax department and other factors.
What rule is applied to employment starting on? 26th of July 22 is the key date for the 20%. If your employment is after this date, you go with the new 20% rules. If before, with the old ones. Now, if your income is above 55K, you need to see if you might be also eligible for the 50% instead of the 20. Has the salary has to be more than 100K from the start, or it starts lower? Again, that's why we strongly encourage people to get a tax advice. The answer is no. It depends though. For the new 50%, it's 55K, not 100, first of all. And then even if you're below 55K, as long as you reach the 55K limit within the first 12 months or the second 12 months of your year of employment, you might still be eligible to claim it. Guys, it doesn't cost much to consult a tax consultant whether you're eligible or not, but it costs a fortune if you claim it and you shouldn't have, or it costs a fortune if you don't claim it and you could have. How getting a Cyprus citizenship affects exemption? Nothing at all, irrelevant completely. If you were eligible for the 50% rule but left Cyprus for over a year, are you still eligible? This is a tricky question. We want to explore this further. I'm sure someone asked it before, Aris, if you remember.
Yeah. So I mean, if you're eligible in principle for the 50%, it doesn't matter that if you left Cyprus and you return, you're still eligible to claim it, as long as in the beginning you were eligible to claim it. We had a lot of people coming to Cyprus and living for 1-2 years. They can continue claiming it for the remaining period of the eligibility.
Assuming they were employed, yeah?
Yeah.
The question about the 10-15 range, the years, for the is enough just to live outside Cyprus, or you should be specifically employed for these 15 years? Sorry, you want to take
No,
this one?
it's just you don't have to worry. You just have to be outside Cyprus. That's enough.
For the
not a Cyprus tax resident. Yes, you must not have been a Cyprus tax resident in those 10 or 15 years.
For the 50%, though.
Yes.
Because for the 20%, it says that you have to be living and working outside Cyprus. You see how complicated it is?
For 3 years, yes.
You have to be living and working outside Cyprus for 3 years before commencement. This is for the 20%, the new one. For the 50%, if I take you through the slides, you have to be outside Cyprus. It's irrelevant with whether you've been working. So again, guys, it's tricky, and every case should be examined separately. I know I'm tiring you, but it is what it is. Tatiana question again: can you apply if you work not on a work visa? Where is the question? Sorry, because I keep getting questions.
It was already covered.
All right. And nominee shareholder needs to declare dividends. If you are a nominee shareholder, guys, this is a different question, guys. to be a nominee shareholder, it's completely outside the scope of this. It's of this seminar. We can get in touch and solve this later. Cypriot, but you have been living outside. We just covered it. In addition to TD1, is it necessary to submit IR1? TD1 is the IR1. It's the same thing. It's a new definition of IR1. The tax form we used to call it IR1. Now it's called TD1. And maternity, we have this a lot, Ari. Yeah, you want to take this one?
Yeah, sure. If you were a maternity but still earning 55, keep it this. Yeah, this is what we discussed. If you're talking about the new one, then it depends when you took the maternity. If you're talking about fulfilling the criteria, the maternity issue comes usually at the case where you did not fulfill the financial criteria, the 55K in the first or the second 12 months. There's a provision in the circular which says if you prove that you're on a maternity, you can still claim it to fulfill the criteria of the 55K. There's another maternity and paternity and sick leaves come up also in the transitional ones. So if the continuous working and employment between the 2016 and 21 criteria, it depends. Usually maternity, paternity, and sick leave is okay to fulfill the 55K in a year, as long as you can support it. There's some criteria that are in the circular as well. And we recommend to get professional advice for such cases, because these are the cases that you really have to be sure when claiming. So,
are we expecting a TD7 monthly in Europe? Yes. Again, this is outside the scope of the seminar, but yes, we know that the form TD7 used to be submitted annually. Now it will be submitted. I think it's from next month. On a monthly basis. And I think Tax for All has been available. It was down for like a couple of weeks. Now it's on. So, guys,
I got some other questions on cryptos.
I haven't seen it. Where?
You go to 3 questions.
Sorry, I missed this one. When you're talking about tax and crypto, is there profit tax on it? First of all, cryptos as we speak, there's nothing mentioned in the law on cryptos, but the official practice is that if you are actually trading on cryptos, which the definition of trading again is not so simple, but if you buy and sell frequently, it's called trading. And by frequently, the tax office it's quite aggressive. A couple of times, and after more than once, basically you're trading. It's taxable, and it's taxable under income tax. The profit 20 to 35%, depending. Now, if it's a one-off conversion of crypto into fiat, into cash, you might have arguments to not tax. But I don't want to lose you. It's complicated. With the upcoming tax reform, it seems that this matter will be clarified, and it's actually quite favorable to the crypto trader. Let's say the fixed rate of 8%. But again, this is not current law. It's expected law. I think we've covered everything. I mean, it's 1.5 hours of keeping you with us. Unless you have anything else to ask, I want to thank you on behalf of Aris and myself, of course, for joining us, bearing with us. I know we've said a lot, but we try to keep things simple. I hope we did. We thank TechIsland again. Artemis, Nadia, and the whole team. Artemis, anything else should we mention at this stage?
No, thank you very much, Marios and Aris. It was a pleasure and very insightful. Thank you to everyone who joined us. As promised, we will be sending the slides to you, and we will be sharing the recording of this webinar on our YouTube channel. So thank you very much, and we hope you found it insightful. Have a good evening. Bye-bye.
Thank you, everyone. Thank you.
Thank you, everyone. Bye-bye.
Bye-bye.
Bye. Thank you.